Corporate finance practice problem using OneNote. Size of lease payment calculation. Get ready, it's time to take your chance with corporate finance. Here we are in OneNote. If you have access to OneNote, would like to follow along, you're not required to, but if would like to, we're going to be on the icon left-hand side, Practice Problems tab, down in the 1632 Size of Lease Payment Calculation tab. Also note when using OneNote, look at the Immersive Reader tool. Our presentations will also be in the text area, same name, same number, but with transcripts. Transcripts that can be translated into multiple different languages and either listened to or read in them. Closing the icon, we have our information up top, calculations on down below. We're going to be determining how much or what the size of lease payments should be. So the example problem, we're saying that we have an asset that we're going to be leasing. $150,000 is the value. So we want to lease it for 25 years, and we're saying that we want a desired return on the investment of 13%. So then the question is, well, how much should we lease it for? Now, we're going to start it off with yearly payments. You might think about it as yearly or monthly type of payments. We'll start it off with yearly. That'll make it a little bit easier to calculate. A couple ways we can do this. We can kind of back into it with the present value calculation. We're going to use the Excel kind of functions to do this. If you want to practice on present value calculations in general, take a look at a prior section where we will do those in depth and more detail with different calculations, including the use of tables, the use of mathematical formulas, as well as Excel. Within Excel, we can use the goal seek function and the present value formula, which is probably a more intuitive way for many people to think about it. We can also use the payment function, which we'll take a look. That would be the more straightforward way to get there. But even when using the payment function, I would still kind of double check it with a present value type of calculation. So let's think about the goal seek type of calculation here first. If we wanted we want to see how much the lease payments would need to be in order for us to reach that 13% return. So one way we can think about that is the use of the present value formula, which would give us the amount of the present value, the rate, the number of periods, and the payment. Those are going to be the items that will be involved in that calculation. So what we're looking for is actually the payment amount here, this last component. And we want to kind of back into that. So if you know the function like this, like a present value function, and you have one unknown that you want to be calculating for, but it's not the result of the function, then we can use the goal seek in an algebraic type of way to solve for that one unknown. But instead of reworking the function, we can basically use trial and error to find the unknown component. So we're going to guess then. We would start off with a number in Excel of, let's say, 10,000. This is actually the answer, but if you started off with something like 10,000 in this cell, then put in your present value function, which would be present value of the rate, 13%, comma, number of periods is going to be 25. We're talking years at this point, so years, we're assuming yearly payments to start off with, comma, and then the payment would be what we started with, which we're going to say was 10,000 at the start, right? And that would give us a result. And then we can adjust this payment item. You can imagine doing it manually if it was in a mathematical formula. And Excel can allow us to do it more quickly. So then we can ask Excel, please change this cell until our end result with the present value formula reaches the asset value of the 150,000. And it will then use trial and error to determine the 20,464 to be the payment amount. So the other way you could do this with Excel is to actually do the payment calculation. So we can reformat this and look for the payment calculation, looking for the function that is the PMT function. And that would look something like this. It would be the payment. We would pick up the rate, the 13%, comma, number of periods, which would be 25. We're looking in years once again, comma, and then the present value is the 150,000. That then also getting us to that 20,464. If you do use the payment function, I typically still like to plug it in and double check it in some way, possibly then still doing the present value calculation as we did up top, but then with the payment function that we found rather than with goal seek, but with the actual payment function, just to double check it a couple different ways. Now you could say, well, what if I want it monthly? So if you want monthly, you could take that amount of the payment, which would be the yearly payment, and divide it by 12, 20,464 divided by 12, and that would give you the 1,705. But that's kind of an approximation, or we can basically do our calculation with regards to a monthly calculation. So the monthly calculation, the payment, let's use the payment formula for the monthly calculation would look something like this. We could say then negative payment, and the rate would be the 13%, but that would be for an entire year. And now we want it monthly, so we could divide that by 12. And so that would give us the monthly rate. Remember that the rate is always basically usually given in terms of years unless it says otherwise. And therefore, when you want to do something else with it, you got to make sure that you divide it out in something like Excel. If it's a book problem, they will often be using years as the basis so that you do not have to work with percentages that are very small. That's the point of having the percents in years as the traditional custom to be. But obviously, when you're calculating monthly payments in practice, which is a common thing, the computer can help us that without as we plug them into our function here. So that we'll divide that up by 12, comma, number of periods. The number of periods would be 25, but now we're talking months instead of years. So we'll multiply that times 12. So you can see we multiplied that out times 12, and then comma, the present value is still the 150,000. That gives us the 1,691.75, slightly different than you can see, of course, the result up there of the 1,705. Fairly close, but slightly different due to the two methods that we're using. Then once I get this, I would kind of plug it in, possibly plug it in, maybe even do like a table, to calculate what would actually happen here. But we can plug this into our formula here, and we got the present value of the rate, 13%, divided by 12, again, because we're doing our monthly thing, comma, number of periods would be 25 times 12, because we're doing our monthly thing, and then comma, and then the payment, I'm just going to test that 1,691.75, plugging that in, and see if we get back to what we should get, which is the 150,000. So we kind of double check that we do get back to that 150,000.